I'm not promoting Stallion, I'm just sharing some data points that I have with me. Now coming to the performance of my equity portfolios, given the performance of right PMS fund, am I happy with it? Do I regret my... Hello everyone, welcome to today's video. In this video, I'll talk about performance updates from my equity portfolios. This includes PMS funds, mutual fund portfolios. I'll also talk about how the markets are going and what am I planning to do in these markets. I worked on some data as well on just to see how bad the current fall really is and should we as investors be worried or not. And lastly, I'll also talk about some of the most frequently asked questions around PMS. A lot of people have shown interest in PMS, which I did not expect. So I'll just be sharing some of my most frequently asked observations around PMS. So first things first, the markets are giving a lot of pain to investors, and I think that this is a natural cycle, and this is why everybody recommends you to diversify. This was the whole point when I started this channel, that I wanted to diversify in other asset classes other than equity. Unfortunately, there is not a lot of information and experience being shared around it, and that's why I started speaking about it. Right now, I am working to get my portfolio allocation to 50% of equity, 40% of fixed income, and 10% of gold. Now, the 50% of equity includes the very high risk equity investments, including startups as well. And the 40% of fixed income allocation includes all the debt. This includes FDs, bonds, SDIs, high risk startup debt investments as well. I'm not saying that everybody should have this kind of allocation. Every investor has their own unique circumstances and their risk appetite. So it can vary for everyone, but the point is that you should diversify in different assets. Coming to the current equity market, the market has been falling continuously and people have been suffering a lot of pain. But I think that this is a natural cycle, and I compiled some data and this is how it looks. So this is the data that I compiled. Right now we are in this fall cycle. It started in October 24 and right now it's March 25. Overall it has been around 5 months, and it has been a negative 15% of absolute fall right now, which amounts to almost minus 32% CAGR. But if we just look 2 years back, there was a fall of 10 months which gave minus 18%. So if you look at the charts, this is how the current fall looks like, and this is how the fall of 2022 looked like, 21-22. Both were preceded by a big bull run. You can see it here, and both had big negative returns. If you want to look at sharper falls, in 2018 there was a fall of just 2 months which gave minus 15 returns, and I'm not even counting the COVID crash here. So this is how the 2018 crash looked like. It was a 2-month period starting from September to October, and the market went from 39,000 to 33,300. Similarly, in 15-16 there was a bear run of almost 12 months, and the market fell by around 25% in these 12 months, giving a negative CAGR of course 25%. Point is that the falling markets are a part of equity as an asset class, and investors just have to be patient during these times. The less impatient investors will lose money, they will exit money with losses, and the patient investors might make big gains. Personally, I am planning to invest more now that the markets have corrected so much. Now coming to the performance of my equity portfolios, starting with the most popular one, the PMS portfolio. Right now it is at absolute minus 17%. In terms of CAGR, it is somewhere around minus 30%, but this does not matter because it has just been a couple of months right now. But if I compare this with all other equity portfolios, everything is down. Even the oldest mutual fund portfolio that was started in 2018 August, even that one is down by minus 15%, and the XIRR is around 18%. This particular portfolio, this was started in 21, and right now it is at just 10% of net XIRR, and from its peak it has gone down by almost 25%. So as you can see that all of my equity portfolios are doing terribly, but it is not a time to measure performance and get demotivated by these numbers. In fact, right now I believe is a great time to invest in equity markets, and that is what I plan to do. Now coming to the frequently asked questions around PMS and some of my observations in last 3 or 4 months. First things first, I am not a registered financial professional. I'm just sharing my own personal experience. So please take things with a pinch of salt and do your own due diligence. Talk to a financial advisor and professionals wherever necessary. Second, I say this to everybody who approaches me, that speak to as many fund managers as possible and try to reach out to customers, real customers, and get their feedback as well. It might be a tedious job, but the kind of insights that you will get from speaking to these people will help you a lot in getting realistic expectations and not be disappointed. Don't just chase the returns or the historical performances, because they will not repeat and these performances will keep on changing every day. So that should not be your only yardstick. It should be one of your parameters, but speak to fund managers, try to understand their philosophy, their principles on why they are investing and how they operate. That might be more beneficial. The next point is keep a long-term horizon. I like to see PMS similar to real estate property. Just like you invest in real estate with a long-term horizon, similarly you should invest in PMS with at least 3 to 5 years horizon. Shorter period than this does not make sense to invest in PMS funds. Also, you lock 50 lakh in a PMS fund and you cannot take that easily out. For example, the current value of my PMS fund is around 43 lakh. If I want to take 1 lakh out of this 43 lakh, I cannot do that. I will have to withdraw the entire sum at a negative -15, -17 returns. So keep these things in mind. These are more important than chasing 20 or 25% returns. The next and perhaps the most important point that I tell everybody is that invest in PMS only when you have a good foundational corpus that you can easily access. These could be mutual funds, fixed deposits, but the number should be somewhere around 1 crore. This is my personal opinion. It could vary once again from investor to investor, but there should be a foundational corpus that you can easily access. Once you have this 1 crore of corpus, the next investment, at least in my opinion, should be around real estate, which should be around 30-40 lakhs, and then comes PMS. So if you have at least 1.5 to 2 CR of corpus, then PMS makes sense, and then you can diversify with PMSs as much as you like. Next point is that Stallion clearly seems to be the most popular PMS among my audience as well. I have seen a couple of audience members comment on my previous videos that they have been invested with Stallion since very long and they are very happy. One of the audience member who reached out to me via mail, we speak almost every 2 weeks now, and he has invested in 2 PMSs. One of them is Stallion and he is very happy with Stallion, and he exited the other PMS fund. I'm not promoting Stallion, I'm just sharing some data points that I have with me. Some people also ask, given the performance of right PMS fund, am I happy with it? Do I regret my choice? So as of now, I'm pretty okay with it. 2 or 3 months is not the correct time frame to judge anybody's performance. I am in this for at least 3 to 4 years and I do not regret investing in right PMS as of now. I do not recommend you to invest in right either. It is your decision, it is your due diligence. You have to research and invest on your own. I can just speak for myself as of now. One area of disappointment that I have felt with right PMS fund is at the time of sales, they marketed their safety and security strategies very highly. I think they did not perform well and I can say that they failed in this particular market crash. So that is one disappointment that I have with them. But that's just one point. It does not mean that I'm overall disappointed with the investment. I said this in my previous videos as well, that my expectation with PMS fund is somewhere around 17-18%. If it delivers higher than that, great. If it delivers lower than that, I'm okay with it. Even if I end up with FD-like returns, that is 6 to 7% returns after 3 or 4 years, I'll accept that. I took a chance, it did not work out well, and it is okay. And this is one thing that I recommend other investors as well. Keep realistic expectations and you won't be disappointed. So that's it for today. If you'd like to discuss anything around equity markets, debt, fixed income, gold investments, please feel free to reach out. So that's it for the day. Stay healthy, stay safe, and take care.